This third conversation of the day is titled Navigating Tariff Wars, specifically the US-China rivalry. And so our next set of speakers will build upon the first panel discussion, and this specific panel seeks to explore the global trade reset, the legacy of Trump-era tariffs specifically, and to identify which ASEAN economies are best positioned to benefit from these shifting geopolitical alliances. With that, I'd like now to invite to stage our esteemed moderator of the session, Erica Tay. Big round of applause. Director of Macro Research of Maybank, as well as our esteemed panelists for the session, Professor Tan Kong Yam, Emeritus Professor from the School of Social Sciences, Nanyang Technology University, Singapore, as well as Julian Neo, Managing Director of DHL Express Malaysia and Brunei. Welcome to stage.
Thank you, Anita. Good morning, ladies and gentlemen. My name is Erica. I'm from Maybank, and I'm very pleased to be moderating this session on the trade war together with very distinguished panelists, Professor Tan Kong Yam and Mr. Julian Neo. Once upon a time, advanced economies excelled in making high-tech things, and emerging market countries focused on mid to low-end manufacturing. So each country stayed in their lane and went according to their comparative advantage, and everyone was happy. Or maybe not. In the last 20 years, something has changed. Because of outsourcing by MNCs, because of FDI, know-how has spread around the world. So now emerging market countries can also make high-end things, sometimes at lower prices than the advanced economies. So we're talking about chips, cars, pharmaceuticals, electronics. We can make pretty much everything in this part of the world. So there are some unhappy parts of the American electorate that are trying to bring things back to the old ways. And enter Donald Trump for the second time. So he has tried via tumultuous means to try and restore things back to the old economic order. But ladies and gentlemen, things are not ever going to go back. So going forward, we see three trends in global trade and economics. First, we observe the world bifurcating into the red supply chain, the China-centric supply chain, and the blue supply chain. So, and I think just now Mr. Fong of Skychip said very rightly, we don't want to choose. We want to be plugged into both supply chains and also every other supply chain in this world. And the second trend that has arisen since 2025 started was that we are moving from China plus one to China plus many. So manufacturers are no longer satisfied with shifting their production to maybe one ASEAN location, but they want to put their chips in different baskets. And the third and final trend is that this practice of transshipment is now out of fashion. So manufacturers can no longer ship in an almost completed product, slap on a coat of paint and say that it's made in Malaysia. So it has to be genuinely made here with local content, local parts, and local workers. Now, can I throw a question to the audience with a show of hands? What do you think is the percentage of local content in a product for it to be considered made here? So what is the minimum content that is required for a product to be considered legally made in ASEAN? So I have three choices, 20%, 40%, 60%. So who thinks it's 20% to be considered made here? Anyone? What about 40%? Yep, I see some hands. 60%, any takers? Right, so the answer is 40%. So goods need to have at least 40% of domestic content to be considered made in ASEAN. Right, so moving on, let me have Professor Tan answer some of the questions that we have regarding the US-China trade rivalry. So Professor Tan, you have been observing this US-China relations for decades. So how has China's trade war playbook changed from Trump 1.0 to Trump 2.0? We noticed that, some people say China seems to have the upper hand this time around. So what are the lessons that China learned from the last trade war? Can we have the slides on, please?
Prof, you want the mic?
Yeah. Before Trump was, in the Trump 1.0, China was really taken aback. So now this time, Trump 2.0, China was much better prepared. They set up internal committee on all the major ministries and agencies. Everybody was prepared. So that explains why when Trump put in the tariff, the Chinese response was quite instantaneous to the Trump increase. And the understanding was that they need strong leverage. And finally they found it, which is a rare earth. If you ask the Chinese senior people, they say, our trump card against Trump is rare earth. It's a major things that start coming out. The second important point is actually the Xi Jinping's assessment. Internally, the Chinese have assessed that Trump respects strength and despise weakness. So you stand firm, he will respect you even though he didn't like it. You kowtow to him, he will despise you. So this explains why China try to stand firm, and they feel that they can, because they have centralized control, the society has greater tolerance for hardship. They can push ahead. And the most important point in the Chinese decision towards US was pain point differential. The assessment is that the pain to Trump will come up first because the financial market, stock market go down, the exchange rate go down, the voters, the consumers are angry with the inflationary impact. The Chinese problem will come also, but it will come a bit later when exports were weaker, unemployment rate go up, and in the meantime, they use the national team to stabilize the stock market and sustain confidence. A very important thing that one has to realize is actually the negotiation, two people that Xi Jinping sent for negotiation. This indicates that he took it very, very seriously and a strategic planning. On the left-hand side is the main negotiator, Vice Premier He Lifeng. He Lifeng is the most trusted guy under Xi Jinping's follower. And in September 1st, 1987, when Xi Jinping married Panellists, it was a small celebration, not like so many people. He Lifeng was the best man. That was a point when Xi Jinping was quite weak, and he himself didn't realize one day he might become the emperor. But this guy was a very loyal guy from the start. The second person, Wang Xiaohong, Ministry of Public Security, was also a very trusted person, and he was sent to address the issue of fentanyl. And of course, he is also very trusted from the Fujian days because Panellists, the wife of Xi Jinping, spent a lot of time in Beijing having his singing career. They have a little daughter called Xi Mingzhe. When Xi Jinping went out station, he would put the little daughter with Wang Xiaohong's family, who stayed two floors down the apartment. So this shows the strength and indications that he has in terms of this negotiation. This chart shows you the dependence. On this corner, this is a case where the China share of US import is very high and the US share of China export is very low. This means that China has a lot of bargaining power. Apple handphone is one. And then you look at the trade of China and US, the other left-hand side is the one that China's share of US import is low, but US share of China export is also low. That is the soybean and the corn. So if this chart shows you that actually China's bargaining power is quite strong eventually based on the structure of trade at the present moment. And of course, it turned out that the structure of trade, the biggest bargaining power was rare earth. You can see that they export, supply a lot of rare earth, there are a lot of supply. More importantly, processing is very big. And if you look through all the various key components of the rare earth, China dominates the mining and more importantly, the processing. You know, an F-35 fighter needs 920 pounds of rare earth, no? This is a major choke point that I think Trump underestimated. Take, for example, you can see, like recently, some of you might have read in Bloomberg that Ford Motor were forced to idle some of the US plants in US because they couldn't get the magnet that came from the rare earth. No? So this is a case where it is becoming a serious choke point. And the magnets are, of course, critical for the seats of the car. You know, your windscreen wiper, your door, your audio system actually depend on some of these magnets. Overall, I would assess that the trade war will moderate. It won't escalate too much. And the ASEAN side might continue to have some benefits. You remember Trump 1.0, China has 20% tariff, Vietnam has 0% tariff, and a lot of factories move to Vietnam and then sell their export to China. I predict that Trump 2.0, after London, will eventually end up with some higher tariff for Vietnam, and of course higher tariff for China. But the differential, I'll give some numbers there, might remain the same, which means that a lot of the factory relocating to from Vietnam to China might continue to go on. The China plus one strategy could still work fairly well overall.
Thank you, Professor. So very insightful views into the Chinese psyche of how to win this trade war. But what about the US? Do you think that Trump and his policies will actually, ironically, bring about hurt the long-term standing of the US in the global system instead of making America great?
Yeah, I think if you look at the chart here, the countries in blue, the largest trading partner is US. The country in red, the largest trading partner is China. In the year 2000, everybody trade. Largest trading partner is the US. China's biggest trading partner is North Korea, Mongolia, and a little bit of dubious country. By 2020, 20 years later, you see it's all red, no? Another way of saying is that if Trump started a trade war in 2020, he would have won. Sorry, 2000, he would have won. 2020 is a bit late when the vast majority of countries' trade is with US, and it would be very hard to squeeze them to say, you get out from your largest trading partner. And this explains why when, the Liberation Day tariff came out, you see very clearly on the right-hand side, the US dollar went down. On the left-hand side, the 10-year Treasury bond gone up. And there was some sense that the global economy may go down. That's why oil price went down. This explains why Trump quickly paused the 90 days, because as far as I understand through some informal sources, after Trump entered the White House, he has to put his investment in a trust, but a lot of his investment are in treasury bills and stock. He lost a lot of money after the thing, so the 90 days helped to improve his asset. And you can see clearly the data there. 10-year treasury bond gone up enormously. Not only that, the financial market volatility gone up. This is the VIX index, as you are aware. The stock market VIX index gone up. The interest rate VIX index gone up. Enormous amount of financial volatility, And then, of course, Trump's net approval rating went down. He sort of, say some negative thing about Biden. But Biden never had this kind of approval rating. He's got hit very substantially. And I think that is what I meant by differential pain point. The Chinese assess that the financial market will hit him first, and then the voters, the consumer, the voters will hit him first. But you should not underestimate the problem for China. I just came back from China, some trips. You see this chart show you a very serious problem. This chart show you consumer confidence is falling in China. Domestic spending is very weak. That's why households dare not spend. And this chart show you the savings that they put in the commercial bank. They dare not spend, and that's why savings keep going up. And you can see this is an aggregative index. And the latest chart still show that the consumer confidence is still a problem. To give you a sense of the thing, I go to Shanghai once in a while to check out, and I usually go to some of the same place. My latest trip was last week. And you can see clearly the fancy food restaurant in Shanghai has nobody or closing down. But you walk further steps down the road, there's a Korean restaurant selling cheap Korean food. You can get extra rice and kimchi with no extra charge. That place is full, So consumer downgrading is very clear. If you look at the high frequency data, you can see subway passenger collapsed during the period when the COVID clamped down. But the latest number, the 2025 number, is improving, but is still not as great, which is an indication that the recovery is improving, but not as much. And then you look at the high-frequency data on 30 city property sales. The red one is 2025. You can see that the property sales have not recovered. And if you look at the property price, they had dropped at least 30, 35, 40%. So, but it's now stabilizing. So China has some serious problem that they have to grapple with. And this chart shows you the people working, where are they? As you are aware, there are a lot of rising unemployment, including university graduates. The lower chart shows you the people, the second bar. In 2024, 45 million people are working in household services, That means helping you to clean your toilet. 40 million are in ride service. That means, TT, the Uber driver. And more importantly, over 30 million at the last end are delivery workers, This shows the hidden unemployment very seriously. I was in Shanghai. You have to be very careful when you cross the road. All these food delivery guys, they will knock you down, Because they are paid according to the productivity. That means they have to, get it delivered within certain period of time. And you can see since 2025, the protest has gone up. But the country is more or less quite well managed. So some of these protests so far did not escalate. But I think your questions, I like to take advantage of this and give a perspective on the future trend. And DeepSeek was a major game changer. China was getting, weakening, the unemployment rising, the export weakening under trade war. And DeepSeek was a game changer and a psychological boost to the Chinese economy when it came out. It was a game changer. It will pervade the whole economy. And I would give an analogy, like China is like a marathon runner. It's getting a bit weaker. The property market has collapsed. The low, medium, and manufacturing is weakening. But DeepSeek is like a fresh injection of adrenaline into the system, and it is going to give it a new lease of life. If you look at the historical research over the last 150 years, when new invention came, whether it's railroad or electricity or PC or internet, the pervading use of it throughout the economy, whether it's in the private companies or the whole sector of the economy, will be the one that give it a kick in the long-term development and productivity increase. And I think DeepSeek will play a very important role in China, partly because the Chinese government at the central coordinating level is pushing it very hard in terms of application of it across all sectors and across all industry. So this chart, some of you might have seen it now. Xi Jinping was tightening on some of these tech people. He hammered Jack Ma. Jack Ma has to go and run around in Tokyo to go into exile. And then suddenly the rivalry of US in the tech side create a situation where President Xi has to help to support the private sector in order to compete with the US. So whether he likes Jack Ma or not, he will have to support these groups and these some of you might have seen this. This is a very major meeting that came out. 7 o'clock, 新闻联播, you know. You see the meeting, the Xi Jinping, after speaking, came down, he shook this Renzen face hand, and then he came over to Jack Ma, no smile, just shake his hand a bit, 5 seconds only, I noticed. And then he went to this guy, Liang Wenfeng, deep Sikh young man. He shook for his hand for over 30 seconds, 6 times longer than Jack Ma. And I've never seen him smile so sweetly, I've only met him personally once. Most of the time, I've seen him in TV. He has never smiled so sweetly in all the TV things that I see. And so this is important to read the tea leaves here in China. So to summarize, I would say that, the Xi Jinping is basically partly saved by this deep Sikh thing. And in China, there is a saying, if you go and meet some of them, they say Trump say, make America great again. If he's not careful, he will make China great again. And Xi Jinping is the biggest beneficiary. And you can see it starting to happen in ASEAN. ASEAN has drifted more aligned with China. Everybody is below 50 means closer to China, but the trend is very clear. My last point is this. I think, most of you are aware, Peter Navarro is the one that came out with this tariff rate for all the countries in the world. But Peter Navarro is a macro guy. Trump is also a macro guy. He doesn't go into details. I can assure you that the enforcement eventually, if the 90 days got clear and then they start to apply, the enforcement will be very, very, very difficult, Why? I'll give you a specific example. You look at silk underwear and cotton underwear. They have different tariff rate, Men's silk underwear is 0.9. Women's silk underwear is 2.1. Cotton underwear is also different. How do you enforce? You can talk about it at the macro level. Do you have enough people to open up all the container and then flip around and see whether it's cotton or silk? It's not possible, The enforcement cost is too high. So this is my assessment that I think this thing is not likely to be easily enforced. Yeah.
Thank you, Professor. In the interest of time, let me now move on to Julian. So, Julian, you are the boss of DHL for Malaysia and Brunei. So I'm sure in the last 3 months, you've had a front row seat to the drama, tariffs up, tariffs down, ships here, ships there. What has changed in terms of regional supply chains that you have seen?
Thank you, Erica. Morning, everyone. So on the back of what Prof has mentioned, if you think that the global trade is in a huge turmoil, I would ask you to rethink. Because from our side of the seat, what we're saying is the global economic seas would have changed, would have shifted, but I think many a times we're missing on the new patterns that are emerging. Opportunities for those who are ready to act. In the current volatility and uncertainty to many customers whom we speak, I think the natural thing is to batten down the hatches, right? Play it safe, wait and see, and stick to familiar strategies. That for us, I think at DHL, is something that we have not done. So the three trends that we have seen, and we have learned quite a bit from the days of SARS, from the last COVID, and building to the trade war today. So the three big trends, some of it has been covered by Prof, right? So the China plus X strategy is definitely adopted by many MNCs. You will not imagine how agile these companies are. The first time when Trump announced the first round of tariff for Mexico and China. Immediately, this company, whom we have served for many, many years, could move their production line from Mexico to Malaysia, Penang, in less than a week. All right? So in less than a week, and these are huge MNCs. To Mr. Fong's note earlier, this is a huge semicon company in Penang. So that's the first trend that we're observing, and we are riding on this trend. Secondly, the diversification of supply chain. So I think we're all very familiar with nearshoring, reshoring, and obviously the latest trend, which is friendshoring. So we are definitely benefiting from that. The third one is we're seeing a huge influx of both domestic and foreign direct investments. So with DHL Malaysia, 60% of our revenue are definitely contributed by the MNCs. We've got 40% of revenue are mainly SMEs. So many a times when our SMEs come and ask us, hey, what data points do you have to see where the trade flows are growing, where the data flows are growing? So this is where we say follow the money. Jerry Maguire said always follow the money. All right, the FDIs, there's a lot being announced day in, day out. Yeah, whether it's FDI or DDIs, I think you need to follow the money. To back what Skychip, Mr. Fong mentioned today, a lot of startups could be emerged from the gaps that the MNCs are leaving behind. So I'd like to just quickly share, the DHL Trade Atlas revealed that over the years, from SARS to COVID-19 to now the trade war, right, global trade is too big to fail. It's too big to fail. From 2024 to 2029, we expect the global trade to still grow at 3.1%. And should the 90 days pause still have a negative impact, a slightly slower growth in global trade, but it will still grow, yeah? So that what Prof mentioned, right? The US is a significant market. It's a significant market, but it's not big enough to make global trade go backwards. The trade in 2024, when we did the Global Connectedness Index tracker, in mid-2024, only 21% of the value of global goods and services are traded internationally. Imagine, yeah? Only 21% are traded internationally. And out of 21%, the US and China ties only accounts for 2.6%. Yeah? So it's too small to derail global trade. So that sort of, you see, definitely the Prime Minister moving to new markets like Brazil, India, Mexico. So in our study, the three emerging markets that are really to look for, one is Mexico, second largest Latin American market. It's got more trade volume with US than China. And the second one is Romania. Romania is the second largest Eastern Central Europe market. It will enable and give benefits to Europe to diversify its supply chain. And the third market that we're seeing emerging is actually the UAE. The UAE has become leadership in many sectors. So the third and fourth one I'd like to really cover is supply chain diversification. Well, for us at DHL, like what the Prof mentioned, the examples of the silk and the cotton underwear, the last 2-3 months has been a pretty hectic. That's where a lot of the AI came into play. We were able, the technology that we invested during the times of COVID, because there were not many of our manual processes that would be able to put into place. The AI investment that we put into place, integration with customs around the world has helped us a lot. You don't have to manually open the container and check whether it's silk or cotton. Yeah, all right. So again, I think to Erica's question, the MNCs that we deal with are flourishing. They are growing from strength to strength. They've strengthened their contingency plan. What I'm worried is the SMEs in Malaysia. The SMEs in Malaysia has more than 60% has adopted a wait and see. Tunggulah, right? Wait and see, things will settle down. After 90 days, is there better news? But I think the three big tips that I would like to give to the MNC is, don't be distracted by the external noises. Look at the data points. Yeah, there's a lot of data points. If you don't have, speak to Maybank, speak to Bloomberg, yeah, or DHL, There's a lot of data points that we can share for free. We don't charge. Secondly is, I think, work with relevant government agencies to open the door. There's a lot of door openers today, but many a times when one door closes, another door opens. So I think I'd like to write on these opportunities. Thirdly, diversify. Look at all the free trade agreements that the country has signed. I mean, you would love the MEP that we just signed with the 4 new European companies, but these are trends that we see as growth markets. All right, so, and most affected industries from our data, retail, consumer, quite affected during these 90 days. Vehicles and parts, yeah. Basic chemical materials, metal and mining, apparel and accessories. These few segments that I've shared are negatively impacted due to the current tariff war. Yeah.
Thanks, Julian. Now we focus our attention on the trend of FDI gushing into Southeast Asia. There is an old Chinese saying, when the clam and the sandpiper fights, the winner is the fisherman. 鹬蚌相争，渔夫得利. So in the fight between US and China, I would like to ask both gentlemen, which ASEAN markets do you see as the biggest beneficiaries? Prof. Tan, would you like to go first?
Yeah, I think the key countries, I would say Indonesia, Malaysia, and to some extent, of course, Vietnam. If you talk to the major policymaker in China, they see ASEAN as a very important strategic partner. Because if you look at China, they feel surrounded. In the Far East, you got US, then you got Japan, Korea, and then Philippines, and then in the South, you got Australia. In the West, you got India. But ASEAN is a strategic partner as a breaking out of this encirclement. And I think this explains why China put a lot of emphasis on Indonesia, Malaysia. These are very important countries, and they are long-term investment area where instead of China putting their US dollar into US Treasury bills and bonds, they might as well invest in ports in Malaysia and roads in Indonesia and help this country to develop. And then in the future, they develop and then they become good consumer. They can buy some of the microwave oven and the refrigerator that they cannot sell to the US. So there is a complementary strategic partnership. And of course, the Chinese see ASEAN, this is, if you talk to some of the serious thinkers who have direct access to Xi Jinping, they see the trend at the global level moving in a somewhat Huntingtonian direction. So the Islamic world is a very important partner for China. And Indonesia is very important. Malaysia is very important. In particular, I think there is a lot of respect in China for PM Anwar because of his stature in the Islamic world. So this is likely to be the direction. And of course, they see ASEAN as a big market. Indonesia is a big market. Malaysia is a big market. And then Vietnam is positioning itself quite well. And I would say these 3 countries will be the biggest beneficiary of these trends overall. Yeah, thank you.
Julian, what are your views? Who do you think will emerge as the biggest winners in ASEAN?
Malaysia. I'm kidding. Okay. So, just to build on what Prof has just mentioned. So, in our world, we have identified, if you look at the, this is public info on the web. DHL has launched our Address Strategy 2030. We've just renewed our 5-year strategy by the group. So, in part of the strategy was a key topic of growth that specifically mentioned geographical tailwind, not headwind, it's tailwind. So geographical tailwind covers top 20 countries around the world. So these top 20 countries are expected to grow up to 2 times the country's GDP. All right, and out of these 20 countries globally, 7 are in Asia. All right, 7 are in Asia. And most of these countries are mentioned by Prof. Malaysia, Vietnam, Thailand, Indonesia, India, Philippines, Singapore, 7 in this region. So based on the 3 mega trends that we saw earlier, China plus X, diversification of supply chain, and looking at the increase in foreign direct investments that we're seeing into these countries, these are the few markets. So being an investor or an operator ourselves, we built the most facilities. We invested in the most facilities in the days of the COVID. And the number of warehouses and facilities that we built even doubled in the times of the tariff. So that speaks a lot for how much the trade volume will benefit some of these Southeast Asia countries.
So you can see on the ground, FDI on the move and being transported by logistics players in real time. So that's real data. Now, moving on to the Q&A segment, we have some very exciting questions. So can we do a quick fire Q&A, gentlemen? First question, can ASEAN realistically build a self-sufficient supply chain, or will it always need critical inputs outside of ASEAN?
I think yes. The answer for me is yes. ASEAN has strengthened its supply chain from the crisis after crisis, from the days of SARS to the pandemic. COVID was a period where the supply chain strengthened. I think that sort of built the fundamental of what we needed today in terms of being prepared for the tariff war. So I'll give you an example. We have our main hub in Hong Kong. Obviously, during the days of the COVID, Hong Kong was more affected than Singapore. So immediately after 2-3 years of COVID, the huge investment went into the Singapore hub. And is it enough? Maybe no, because you build sub-hubs based on the hub and spoke methodology. KLIA was is our most advanced gateway that we've invested in October last year. So that sort of act as a contingency plan for the main gateway, for the main hubs. So in each country that we think that falls under the GT20, that's a lot more investment being allocated to make sure that we are able to be independent, and to that, I think ASEAN is ready. Yeah.
Prof. Tan, do you think that ASEAN is ready to take in more parts of the manufacturing value chain?
Yeah, I think I'm a little bit wary to say that ASEAN can be self-sufficient in the supply chain because our scale is not enough. So we will need components, suppliers from China, Japan, Korea, and others. And it might be an advantage for us not to be overly dependent on China, but we spread out our linkages into Japan, Korea, and to some extent to the US in order to balance our long-term dependence. China is getting very big, and China has a very, very important advantage, because of its scale. They can go down the cost curve so far down that the unit cost is very low, and it can overwhelm a lot of countries. So this explains why some of the products that we can get from China are very cheap, and ASEAN should be cautious to diversify, and so that our industrial base are not affected negatively. Yeah.
Thank you. And then a final question. How have nearshoring and friendshoring and onshoring strategies changed since Liberation Day? So we know that a lot of manufacturers have tried to move plants to Mexico to take advantage of the USMCA, but things have changed a lot since then. So do you think that MNCs are thinking a bit differently now, Julian?
I think the thoughts along that line are still very much the same. I think nearshoring and friendshoring are something that is on the top of every CEO's mind. Malaysia is a key big beneficial of nearshoring as three big trends, right? One is obviously the geopolitical tension between the US and China. As what Prof mentioned, you see a lot more companies diversifying from China, and Malaysia is a big beneficiary. Shorter lead time, I think we're moving from just in time to just in case. So shorter lead time and demands from customers have increased because shelf life has gone a lot shorter. So I think if you look at the supply chain, the lead time now, if for every RFQ that we get a chance to pitch, they will tell you, my customers want the goods or their parts around Asia next day. Yeah.
Yeah, I think, you see, US has outsourced manufacturing a while, and their wage rate is quite high. So I think this explains why Trump 1.0, the biggest beneficiary are ASEAN, Mexico, and others. And I think it will continue to be there, of course, with some adjustment in Trump 2.0, because he will put on more tariff on Mexico and ASEAN. But it's not possible to move a lot of the manufacturing back to the US, no? I think Apple make a internal calculation. They make a handphone in China, it might cost less than $1,000. If you move the whole thing to US, it might cost $6,000 to $7,000. So there is no more profit margin. Your Apple stock price will collapse, no? Some of you might be aware that Eric Trump, Trump's son, wanted to make a handphone, $499, gold-plated. It's gold, actually gold-plated only. But recently he admitted that he has to be made in China. But it's just the cost structure in US is not able to make a handphone for $499 US. It's not possible. So he's creating a dilemma for corporates because he doesn't want Apple to make the handphone in China. So Apple tried to move in India. He said, I don't want it in India, I want it in the US. But it created a very serious problem because your cost structure, the minimum wage in California, in US is $7.50. In California is $12.50. $12.50, you can hire a lot of workers, in Malaysia and others, US dollar per hour. So it is good to talk about high-flown, strategic nearshoring, offshoring, but you have to be practical. You go down to the ground, what is the operational cost itself? It's not realistic. I've been in government, so I know how to look at all the big macro guy. But then over the years, I have go down to the ground to talk to people, look at factory operation. Peter Navarro keep looking at the global side. I don't think he has visited a factory, So that's my sense, yeah.
Thank you very much, Professor, and thank you, Mr. Neo, as well. That was a lot of food for thought. So now it's time for food for the tummy. So I'll hand it over to Anita.
Thank you so much, Moderator Tay. Another resounding round of applause for our very knowledgeable and insightful and colorful, engaging panel of guests. Thank you, Professor Tan. Thank you, Julian. A lot of information to digest this morning, and digest we will over lunch.